Let's jump right into today's explainer because we are looking at a stock that is, quite literally, sitting at the epicenter of the biggest technological shift of our generation. We're talking about Micron Technology and its absolutely historic 2026 breakout. If you track the markets, you already know the semiconductor industry isn't just a simple boom and bust cycle anymore. It's basically become the bedrock of global strategic infrastructure. And Micron, they're right at the forefront of it. Today, we're going to visually break down the complex financial and technical research to figure out exactly what's driving this massive move. Here is a quick look at our agenda for today. 1. The 2026 Micron breakout. 2. Financials and AI technology. 3. Competitor crises and geopolitics. 4. Understanding the risk factors. And 5. Valuation and investment strategy. Let's get right to it. Section 1. The 2026 Micron breakout. From cyclical stock to growth asset. Okay, I really want to grab your attention right out of the gate with this number. 178.7%. That is Micron's staggering year-to-date growth as of May 11, 2026. On that date, they closed at a record high of $795.33 per share. And look, this wasn't some slow, gradual climb. This was an aggressive, historic rally. We're talking about its best weekly performance since way back in December 2008. Why does this matter? Because this kind of movement, paired with massive institutional buying volume, tells us the market is completely repricing what this company is actually worth. Just to give you a sense of scale, contrast Micron's 178.7% monumental rise against the broader Philadelphia Semiconductor Index. The SOX is up 69% over the exact same period, which is a very respectable number on its own. But Micron isn't just riding the broader semiconductor wave here. They are completely outpacing it. They are leading the charge. Moving to Section 2, Financials and AI Technology, the engine behind the rally. The sheer scale of this financial jump is just wild. Look at the progression from fiscal quarter 1 to fiscal quarter 2, and then to the FQ3 guidance. Revenue jumps from $13.6 billion to nearly $24 billion, and then the guidance for FQ3 hits an expected $33.5 billion. Think about that for a second. To put that into perspective, that single quarter guidance of $33.5 billion is higher than any entire fiscal year in Micron's history up to 2024. Plus, their gross margins are expanding from 56% to around 81%. This tells us that the old historical problem of memory oversupply has been completely neutralized by a massive new wave of demand. And that massive new demand vector all comes down to this specific technology, high bandwidth memory, or HBM. Basically, this is high-performance 3D stacked DRAM. By stacking the memory dies vertically and connecting them, HBM gets you incredible bandwidth while actually using way less power. The key takeaway here is that HBM is the literal bottleneck for AI computing right now. Without enough of this specific memory, even the absolute fastest Nvidia GPUs simply cannot function efficiently enough to process large language models. Now, if you look at the global HBM market share, SK Hynix has a commanding 62%, Samsung is at 22%, and Micron is currently sitting in third place at 21%. You might be wondering, if they're only in third, why is the stock soaring like this? Well, Micron's specific product, the HBM3E, boasts about 30% better power efficiency than its competitors. And in data centers, power and cooling are your absolute biggest costs. Because of that crucial technical edge, Micron's HBM supply is 100% sold out through the entirety of 2026. They've essentially locked in highly visible long-term revenue. Let's look at Section 3, Competitor Crises and Geopolitics, Real-Time Market Tailwinds. There are some real-world events pouring fuel on the fire right now. Chief among them is a major labor crisis at a key rival. In May 2026, the Samsung Electronics Union scheduled an 18-day strike. Analysts estimate that this action threatens about 4% of the total global DRAM supply. In a market where supply is already stretched incredibly thin due to AI demands, this competitor crisis creates a massive supply vacuum. For Micron, it's a distinct catalyst. It likely forces major buyers like Nvidia to urgently up their orders with Micron to secure their supply chains, which inevitably drives up memory contract prices across the board. We also have to look at the geopolitical chessboard. Under the U.S. CHIPS Act, Micron is dramatically expanding its domestic footprint. Right now, less than 2% of memory is actually produced in the U.S. But in 2026, Micron accelerated a $1.2 billion investment into their Idaho plant, specifically to co-locate their R&D with production so they can meet AI demand faster. They've also adjusted their massive New York fab target date to 2030 with a long-term goal of hitting 10% U.S. memory production by 2035. Shifting that production domestically heavily insulates Micron from messy global geopolitical risks. Let's transition to Section 4, Understanding the Risk Factors, a sober look at the headwinds. Obviously, to get the complete picture, we have to objectively analyze the bearish indicators too. The research report clearly lists 4 major threats to Micron's momentum. First, Nvidia concentration risk. A huge chunk of their high-margin HBM sales are tied to that single client. Second, manufacturing complexity for the upcoming HBM4. It requires 12 to 16 layers of stacking, which makes securing good manufacturing yields incredibly difficult. Third, extensive insider selling activity. Company executives have sold stock about 87 times over the past 6 months. And fourth, the RSI, or Relative Strength Index, is highly overbought. It's sitting between 85 and 89, indicating the stock is technically ripe for a healthy 10 to 15% pullback. Now, regarding that third risk, the insider selling, it's really important to understand the Rule 10b-5-1 trading plan. This is an SEC regulation that lets corporate insiders set predetermined automated schedules to sell their company's stock. It prevents accusations of insider trading because the trades trigger automatically based on dates or prices. So when the report notes that CEO Sanjay Malhotra sold $21.45 million in stock recently, it's important to realize this might just be routine portfolio diversification under this rule, not necessarily a red flag or a bearish signal from leadership. Finally, moving into Section 5, Valuation and Investment Strategy, Deciphering the Multiples. To understand how analysts are valuing this, we really need to focus on the PEG ratio, the price to earnings to growth ratio. This metric enhances the traditional PE ratio by factoring in the company's expected earnings growth. The standard rule of thumb in market analysis is that a PEG ratio below 1.0 signals that a growth stock is currently undervalued relative to its future potential. And that leads us to this completely extraordinarily low figure from the research report, 0.09. Micron's calculated PEG ratio is literally just 0.09. Despite trading at record highs near $800, their forward PE is only about 12 times earnings, while the entire sector average is sitting at 24. The core thesis of the report is that this mind-blowing 0.09 PEG ratio proves that Micron's current stock price, as high as it seems, mathematically has not fully accounted for its massive, contracted future growth trajectory. Based on that specific valuation, the report outlines a 3-step tranche buying strategy. Step 1 is the entry. At current levels, around $795, allocate 30% of your intended position to follow the trend. Step 2 is the add. If technical pullbacks bring the price down to the $740 to $750 support range, buy another 40%. And step 3 is the strong buy. If broader market volatility drops the price to $660, the report views that as a definitive buying opportunity to purchase the remaining 30%. This is purely the risk management methodology presented by the financial analysts in the source report. To wrap up our explainer today, I want to leave you with this incredibly powerful metaphor directly from the source report. They wrote, Micron is no longer just a semiconductor company, it is the swiftest and most powerful vessel riding the massive wave of the AI era. It's a quote that really forces us to ask a provocative question. Are we still analyzing traditional hardware manufacturers here, or have companies like Micron fundamentally evolved into the literal infrastructure of artificial intelligence itself? It's definitely something to think about. Thank you so much for diving into the data with me today. Keep analyzing the facts, and I'll see you in the next explainer.